while I do think the path of least resistance over the next year or so is probably higher in coffee, I think in the short run, like we're talking the next couple of months, 3-4 months maybe, I think we probably see coffee weaken a little bit. And here's the reason I think that might happen.
This episode is proudly brought to you by Mapper Forward's workshop. It's time to become a coffee consultant. Learn how to diversify your revenue streams and create freedom from your day job while saying goodbye to that alarm clock forever by becoming a consultant within the coffee industry or directly to consumers who have shifted towards home brewing and home roasting. Protect your income from challenging times in the coffee value chain by taking this course today. Go to mapperforward.coffee/workshops or click the link in the show notes for details. Welcome to the Daily Coffee Probe by Map It Forward, friends. I'm your host, Lee Safar, and this is episode 1 of a brand new 5-part series. I think this is a super important 5-part series. We are recording this on the Saturday before it comes out. And my guest is my friend and someone who I have such a deep respect for, Carley Garner from DeCarley Trading. Carley, welcome to the podcast.
Thank you, Lee. It's fun to be here as always.
You break my brain many times and I love it. I try and understand a lot of what you talk about, Carley. I get about 5% of the way there, but I keep trucking on in the hopes that at some point I'm going to understand any of the charts that you release, any of the things that you're doing, but I'm still learning, and I really admire the way that you approach what you're doing, because it's all based in logic. It's all based in kind of taking a more balanced approach towards what you do. So for those who haven't seen you on the podcast before, tell everybody what you do at DeCarley Trading.
Okay, so obviously my name is Carley Garner. I own a boutique brokerage shop. We handle futures and options on futures. So it's basically commodity trading. We deal with primarily speculators, people that are trying or attempting to make money by speculating in commodity markets. We also do quite a bit of business in hedging. So we have a lot of farm and ranch clients, for example, corn farmers, wheat farmers, cattle ranchers that understand that their commodities have price risk. And it's really difficult to budget their operations when they don't know if they're going to be selling corn at $3 or $4 or $8. And so what we do is help them kind of hedge some of that tail risk so that at least they have a better idea of what they may or may not be selling their crop for and things like that. And there's lots of different hedging strategies that we use, and we can talk about that later if you'd like. Mm-hmm. But hedging is really, really important. And we'll also talk about how coffee is very volatile and also should be hedged. But unfortunately, hedging in coffee seems to be very rare. I haven't worked with too many coffee operations that actually hedge. They're kind of like, they don't realize it, but what they're doing is cash market speculating, because they can only control what they can control. They can't control the markets, but they can control the actions they take to combat all the chaos that goes on in the market.
And I promise, folks, if you just heard that and went, what the fuck is she talking about? I promise we're going to go slow and we're going to talk about a lot of this stuff as we go. Whenever somebody calls me and says, Lee, I need you to help me figure out how am I going to hedge, so coffee producers will call me, the first person I send them to is Carley. And so to be clear, Carley does not sponsor the podcast. There is no financial arrangement here. Carley is somebody that I would trust with anything to do with my business. And so if you are looking to figure out how to hedge, I would have no problem saying go to Carley and knowing in full transparency that she's going to take care of you. This is a really challenging thing for those of us in coffee to understand, but given the price volatility that's been happening, I think it's important that more and more people try to understand this. Before we start the series, I want everybody to know that nothing that we're going to talk about in this series is financial advice. So your situation is unique to you, and if you do want to know how to do anything, you should speak to a professional like Carley that can help you deal with your own personal situation in your business. And please remember that hedging is risky, right, Carley? Like all of this stuff is risky.
Correct. So, to be fair, like hedging is you're attempting to remove risk when you hedge, but the reality is it's like insurance. So a lot of times it's money, you spend money trying to reduce your risk, and it actually creates the problem itself.
Right.
So just like you pay your insurance company and usually you don't get anything back, that's kind of how hedging is. But the reality is when you have insurance and you do need it, you're really glad you have it. And so that's the idea.
Right. Now, in this series, folks, the theme for this series is the volatility in coffee pricing. And we're talking about that because as the supply of coffee becomes more and more challenging, with climate change and with labor becoming the two most significant impacts on what's causing issues with supply, and pricing, I guess, because a lot of coffee producers are walking off their farms and saying it's just not worth it. The juice is not worth the squeeze, which is reducing the supply of coffee. Because of the reduction in supply, price volatility is a problem. And we have seen that this week where coffee got close to $2.50 on the C or the ICE exchange. But we may see that continue to go one way or another as the year progresses. And so because of that, I thought it was really important for us to start exploring a couple of key things so that everybody goes into this crisis, continue what I'm calling the coffee crisis. But I want you to go into it with as much information as possible. And the other thing that I want to say is, one thing that we advocate for on this podcast is independent thinking. And you can't be an independent thinker if you don't have the knowledge that's required for you to make decisions for yourself. And this is another series that we're trying to help people get empowered by people that we trust to impart this information. So in this series, we're going to be talking about, as I said, the volatility of the price of coffee. And in this particular episode, we're going to talk about what's happening in the coffee futures market at the moment. So Carley, what is happening in the coffee futures market at the moment?
Okay. So I'd actually like to point out one thing also.
Sure.
Be very, very careful relying on quote unquote experts on price predictions. So there's a lot of people out there that will say coffee's going to this price or coffee's going to this price or whatever commodity you're following. The reality is nobody knows exactly what's going to happen. Or we're all making guesses. We're all hopefully making educated guesses and putting all the information together. But in the end, I've been doing this for a long, long time. And some people expect me to always know exactly what's going to happen. If I knew exactly what was going to happen, I'd be retired. If that's the reality. We just don't know. But we have all the puzzle pieces and we try to put them together. But in the end, any approach you take to the market, whether it's in your business or hedging or whatever you're doing, you should always just understand you don't know what you don't know. And you want to protect yourself from the unknown because we don't know. And that's really the bottom line. As far as what's going on in coffee, so there's a couple of things that I'm kind of focused on in the coffee market. Right. While I do think the path of least resistance over the next year or so is probably higher in coffee, I think in the short run, like we're talking the next couple of months, 3-4 months maybe, I think we probably see coffee weaken a little bit. And here's the reason I think that might happen. We're going into what's for most people the harvest. So generally commodities that are agricultural, the supply is the largest around harvest time because that's when everyone's obviously accumulating it. And so usually that's when the prices are the lowest point of the year. Now it's not always like that. This is just a guideline, but that's generally how it works. Also, I'm big into technical analysis, which a lot of people will tell you is complete BS. They don't believe it, but I can't explain why it works, but it works more than it doesn't. So you probably shouldn't ignore it. So seasonality and charts are telling me we probably pulled back a little in coffee. Also, the most significant factor is in the futures markets, we have what's called a COT report. It's a Commitments of Traders report. It's issued by the U.S. government. And what they do is they compile stats from the exchange, the ICE exchange, where coffee's traded. And they tell us where speculators are positioned, where commercial hedgers are positioned, and to what magnitude. And speculators right now are holding one of the largest net long positions in coffee ever. So even if the fundamentals are wildly bullish, we might be at a situation where there's just simply not any additional buyers to push prices up at this particular moment. So, to give you an example of how this would work, in 2022, when natural gas was trading like $9 or $10, there were zero people out there saying that the fundamentals were bearish. I mean, we had just had a natural gas pipeline that supplies Europe, sabotage. We were in a war. There's supply issues. And next thing you know, we went from $10, now natural gas is under $2. And the reason that happens is when the fundamental story is as bullish as you could ever imagine it, everybody that wants to be long the market, whether it's cash market, futures market, they've already taken action. They've already panicked and bought, or they've already hopefully been long and enjoyed the ride. Whatever the case is, they're already long, and the buying just dries up. There's no one else to buy. That story has exhausted itself. The trend's exhausted itself, and we pull back. I think coffee's probably in that situation for the next couple of months, but what it will give everybody an opportunity to do, if you're a producer, it's a good time to hedge your downside risk. If you're someone that is a coffee buyer, you should be prepared to start hedging pretty aggressively if we do get a big dip. So that's kind of where we're sitting right now.
So if I understand this correctly,
okay.
And I apologize if I get any of this wrong, but there are going to be people who just went, what? I don't understand anything. So if I can understand it, they can understand it. When someone's going long, they're buying, right?
Correct. Yes.
Okay. So there are a lot of speculators that have bought contracts and they're holding those contracts. I have a silly question in that.
Yeah.
How do we know they're speculators?
Okay, because this is a good question. The brokerages and the exchange keep statistics on it. So, for example, all of my clients, they're basically categorized by size and how many contracts they're trading. So, a futures commission merchant, which is basically a brokerage firm, has to report to the CFTC, which is a government regulatory entity in our business. We basically report if a trader has X number of contracts. It gets a little bit complicated, but every market has a limit, like a limit of the number of contracts that you can hold while staying under the radar. Once you get big enough and you're holding enough contracts, then suddenly you're automatically reported to the CFTC. It's not a bad thing. It just means that now you're a large speculator. So you fall into their data category of large speculator. There's a lot more eyes on you to make sure you're not trying to manipulate the markets, things like that. And then they categorize, like when we open a trading account for somebody, they choose, are they opening a speculative account or a hedge account? So it's actually the application process that separates them between spec and hedge. And then in addition to that, they separate themselves by size. They don't do that on their application. That's done on the back end in the brokerage, but that's how the government gets that data. And I would say there's probably, like I open accounts for some farmers that they open the account to hedge and they do a little bit of hedging and speculating. So I would say there's probably a little bit of fuzzy math in there, but the big picture is probably pretty accurate.
And speculators buy these contracts because they anticipate that at the time that they're buying them, it's low. They expect the price to go up.
Correct.
And so then they'll sell them when the price is high. Is that correct?
Correct. That is correct. So I should have clarified that. You're right. So if everybody's holding long positions, if they've already bought, the only way for them to get out is to sell. And so that's where the problem comes in. Everybody's already long. There's not going to be enough buying pressure to keep pushing prices up, or maybe even to hold prices up. And then if all of those people, and again, this is the largest net long position almost ever in coffee. So if everybody runs for the exit at the same time, what you get is like a collapse. And we see that in commodities a lot. And it's usually not a dribble lower. It can be, but it's usually a really big, haircut. And then once that works itself out of the system, we probably stabilize. And I think, as I mentioned before, I think coffee probably stabilizes and goes higher, but we have to work out the imbalance in the positions, in my opinion.
What happens to, actually, let me ask it a different way.
Okay. All right.
If there are speculators holding these contracts, does it stand to reason that on the other side of those buyers, there is people who are expecting to deliver coffee on those contracts? So governments and places around the world are preparing that coffee or assigning it to those contracts?
Yes. So not all of them, but some of them. Like most futures contracts that are traded on the exchange are never go into delivery. Most people are buying and selling just to speculate on price. There are some that are planning on like they're sellers and they want to deliver. So that's true. And there's also hedgers on the other side of it. So if you see speculators are very, very long, hedgers are usually really, really short.
Okay.
And so they're obviously at the opposite end of things, but in reality, they tend to unwind all at the same time for some reason. It's usually maybe it's a news event, or maybe it's just someone puts a big order on the market and it drops a little bit and everyone panics. I mean, it can be triggered by a lot of things. We don't know until it's actually triggered what's going to happen, but eventually it happens. I'm going to kind of go slightly off topic, just as so you know an example. In the Japanese yen, a month or so ago, we were kind of putting red flags out there that there was the largest net short position of the yen that we've ever seen. And we didn't know when it was going to happen, but we knew at some point if everybody's short, eventually that trend's going to exhaust itself. And then if everybody decides to get out at the same time, it blows things up and it breaks things. And that's exactly what we saw in the yen. I don't think we see something that crazy in coffee, but again, we don't know until it actually happens and we see how it plays out. But it's kind of the similar idea. If everybody that's long coffee decides to get out, and to be honest, seasonally, they probably should. It's probably the time for them to start taking profits if they've made money on the upside. And so there's a pretty good expectation for that to happen.
And are you saying that because coffee reached $2.50 this week and the price is quite high, so we have no idea if it's really going to continue to go higher? Is that why?
Yeah. So yes, that's a good point. So the median price for coffee, if you look over the last several decades, is like 175-ish. I mean, it goes above, it goes below, but that's basically the median. So 250 is rich. I know we're talking about maybe seeing higher prices, and I think eventually we will. 250 is rich. And so in my opinion, again, if you're a producer, even if you think coffee is going to 300 or higher, you still want to be hedged. And also, I will post a social media chart of coffee over the last 50 years so you can just really see the reality of it. It's really wild. The all-time high was like in the 70s. I think it was like 338, 335, somewhere in there. And we've seen, I think 6 times we've been above 260 in history. So in the last 50 years, we've been above 250 or 260, that general area, only 6 times. It's never held. And each time that it got up there and failed, we saw coffee make its way to $1. And in a couple of cases, we saw it go to 40, 50 cents. So this is just the nature of the beast. Maybe this time's different, but the odds suggest that it won't be. So you really want to protect yourself when prices get higher if you have downside exposure. Even if you think it's going higher, again, we don't know. So you always have to prepare yourself for the worst case scenario and hope for the best.
This gives me the same kind of anxiety as like when I hear people gambling. This is the same kind of anxiety that I get from that kind of thing, because you just never know when is the right time to cash out. And I mean, anyway, I do want to say to people, to Carley's point about nobody knowing the price, if you haven't checked out Felipe Cruz's series on the podcast, he had a fantastic kind of approach at the way that FAF coffees are approaching everything. FAF is preparing for 4 scenarios, and they have a strategy on what will happen at all 4 scenarios. So that's if the price goes below 250, if the price goes between 250 and 260, if the price goes from 260 to $3, and if the price goes $3 and above. And his business is prepared for they have a game plan for each of those 4 scenarios. And I think that's a fantastic approach that is a really responsible way to approach this. And if you don't know what to do in those scenarios, that's when you can go and get some extra help to help you based on what your own business requirements are to help you prepare for those scenarios. Yeah.
I think I'll also add, I think that's an amazing idea to have some plan like that, simply because where people get into trouble in these markets, whether they're speculating or hedging or cash market, whatever they're doing, human nature is we always expect things to work out. We're always optimistic. We think things are going to go our way. They rarely do, to be honest. So human nature works against us, and greed works against us. And a lot of farmers, they're in the trenches. They think they know everything there is to know about whatever it is they're growing, and they think they can predict the price. And trust me, you can't. So, I mean, you might predict the direction, but your timing might be off. Your timing might be good, but the direction wrong. I mean, it's really, really difficult. So always play play every scenario. I like it.
Yeah. So in the next episode, folks, we're going to focus on where the volatility in coffee pricing comes from. So join us for that episode. Peace, love, and peanut butter. Have an amazing rest of your day. I really hope you enjoyed this episode, friends. Please don't forget to show us some love by subscribing, liking, commenting, and most of all, sharing this podcast with your friends. Check the show notes for links, including our sponsors and our Patreon. And stay tuned for more great conversations on the Daily Coffee Pro by Map It Forward.